In this video, I want to talk about the current stock market rally and our current economic reality. I'm finding every day that the gap between these two is getting wider, and it's concerning me because I've had a number of conversations with different individuals who have asked me, well, what should I be doing? My advisor's telling me I should just be all in, that everything's going to get back to normal and everything's going to be fine. I have some major concerns about that kind of advice and want to address those in this video. If you are new to my channel, my name is Jared Ayers. I'm a CFA charter holder and I've been managing my own money for over 20 years and have created this little channel to share with anyone who's interested the thought processes, strategies, and techniques that I use to manage my own money, and also bring to light insights that I see in the markets, especially during times like these. So I hope you enjoy. So the first thing I do want to talk about on this topic is the backdrop to this whole economic issue we find ourselves in today. Of course, this was caused by COVID-19, or more specifically, the policy or decisions around how we deal with COVID-19. So obviously, extreme lockdown measures. People basically held up in their homes. Cannot go out and do much else other than to buy groceries or absolute necessities. Obviously, we haven't seen that before in a very long time. Thinking back to 100 years ago with the Spanish flu, perhaps, but with a very integrated economy the way we are today, the way people can still access and communicate with each other through other mediums, it created a very extreme situation. So I get that up front. And of course, because it was theoretically self-imposed in terms of the lockdown measures, then theoretically also, when those self-imposed measures get lifted, the tendency or thought processes would be, things are going to bounce back or resume to what they were prior to those measures being imposed. I mean, that actually makes sense. I guess the problem I have is the impact and the scars that that response has had. So, that's one thing that you have to think about when you're looking at this whole situation. The next thing I want to point out also is, of course, the media coverage, specifically the financial media. One of the regular headlines I see virtually daily is around the stock market coming back up towards its previous prior to COVID-19 highs. The Dow surging, the market rallying, new highs this week, focused on reopening, potential cures or vaccines being developed. This kind of focus is probably expected based on what's going on, but one thing that I don't see is a real balanced approach to media coverage, insofar as there's this other stuff going on in the actual economy that doesn't seem to be getting many headlines. Certainly you hear the odd thing about it, GDP or unemployment, those types of things, but it's pretty much being muted by the hope that everything is going to resume to normal. So I think that's one of the challenges we're facing right now with these sort of talking heads and media coverage really focusing on the upside without really balancing that coverage with, well, what happens if things don't actually get back to normal. And one of the things I've always done in my investing career is try to get away from headlines and noise and really try to focus on the data that actually drives the fundamentals, which hopefully are represented by prices of the companies that actually operate in the real economy. So again, not really super excited that everything is so lopsided towards the positive. Really would like to see the media come back and actually cover what's actually going on from a fundamental standpoint. Now, speaking to some of that economic coverage that I talked about, or lack thereof, Some of the things that we're hearing now, is that I'll just take the U.S. as an example. The expected year-over-year Q2 GDP is probably going to be negative 20% or worse. That is pretty drastic. That the total 2020 GDP for the US will be negative 10% and globally negative 3%. So those are horrific numbers. Those are going to be pretty tough to overcome. It's hard to believe that something that lasted, a little bit more than 3 months is going to have that kind of an impact. But here we are faced with that. Not really getting a lot of coverage from that front, but those numbers, are just, appalling. Even on the labor side in the U.S., continuing jobless claims at the beginning of May, we're surpassing 25 million. That number continues to climb. All these economic indicators that we're seeing come through now, and yes, some of the data is lagging, which is why maybe it's not getting as much coverage, but they are still falling at an increasing rate, and that's not a good sign. It certainly doesn't speak to or support a stock market that's actually kind of moving very quickly in the opposite direction. So again, does that make sense, I guess? Does the economy support what's actually going on in the markets? I think everyone has to kind of make that call for themselves, but the data, I think, does speak for itself as well. Now, just talking about the relationship between the economy and the markets, generally speaking, the markets have always led the economy, at least historically. Obviously, in this instance, it was very, very acute. The measures that were imposed, the lockdown on economic activity, and what happened in March seemed to be that same sort of pattern, although it happened almost hyper fast, where the stock market just plunged immediately following kind of all the imposition of the lockdown measures. But now, of course, we're seeing it come really far back from its lows, heading towards really the highs that it achieved prior to this whole COVID-19 pandemic. One of the things I think that I'm confused with is that the economic indicators are actually still in free fall. So how does it make sense that the economy is bouncing back when things are actually still getting worse from a data perspective? Now, historically also, the stock market has always priced in the future, which is why it's always led markets. So one could argue, oh, well, it's just pricing in the fact that everything's going to be reopening and everything's going to be back to normal, and the data is actually still lagging. Perhaps, but again, given the numbers I repeated just a few moments ago, over 20% down year over year in Q2 GDP, negative 10% in the US, and negative 3% globally for all of 2020. Is the market really pricing in the future? When is that future going to actually come to fruition? I'm not sure. But again, it just begs the question, does this actually make sense? And again, is it getting its airtime that it needs in the financial media? Not sure that that's the case right now. Now, of course, the other piece to the whole rebounding pie is, of course, the central banks and their activity. Obviously, a lot of stimulus coming out from the Fed, from Europe, Canada. There's not really a central bank, it seems, in the world that hasn't put a massive amount of liquidity back into the market, has lowered interest rates to near zero, and is doing everything they can to support their populations, businesses, economies, etc. I think the Fed is very close to having the U.S. government is very close to having their Main Street package of loans ready to go. So all of this is also fueling the optimism that everything is going to get back to normal. But I guess the other question is, can these central banks and governments bail out everybody? It seems a very far-fetched statement to say that everyone can have this type of support and be back to normal. I just don't see it. I think we're going to start to see some bankruptcies. We probably already have in some sectors of the economy, certainly in the small business side for sure. I think the banks are looking at their loan books and looking at their loan losses. And there's a huge trickle-down effect, of course, with this type of seizing up of economic activity. So, despite all of this fuel, money printing, quantitative easing, all these terms, again, does it make sense? Can these central banks and everything bail everyone out? And if so, why is this the first time that's happened? Why wouldn't it have happened in the past during other crises, wars, Great Depression, other types of things? It just doesn't seem that plausible, and again, just makes me wonder whether we're giving kind of a balanced view to actually what's going on. So I guess my main ask and the point of this video really is for anyone watching, just a request to think critically. Does it make sense that central banks can bail everyone out? Does it make sense that unemployment at all-time highs is going to snap back and resume a normal or pre-COVID-19 level? Does it make sense that a stock market that is nearing its all-time highs is coinciding with a GDP that's approaching its all-time lows? Does it make sense if someone's giving you advice, oh yeah, you need to be all into the stock market right now, and you're not sure, don't be afraid to ask them, why do you think that? What analysis have you done? Do you track economic indicators? What is the basis for that type of advice? I mean, one of the things I always ask is, does this make sense? Whenever I'm investing in anything, do I understand it? Does this make sense to me? If I don't understand it, if it doesn't make sense, I'm not going to bother. Some people say, well, I don't want to invest in gold because I don't really know about gold, but I know about real estate and that's where I'm comfortable and that's where I want to invest. Then that's what you should do. Invest in the stock market or don't. It's completely a personal thing, but I think at the end of the day, no matter what you invest in, no matter when you invest in it, you do have to understand it. And I think right now is a pretty dangerous time, to be frank, to invest in the markets, whether that be bond markets or stock markets. I think you really have to look at what's going on behind the scenes, behind the headlines, behind what we're being told here, and really look at the economic reality. Do you want to actually be in the slaughterhouse during the slaughter, or do you want to just be outside of it and just waiting till it's all over and then you can go in and pick up the pieces afterwards? That may be a bit of a grotesque analogy, but it's kind of our reality right now. And if you don't feel comfortable doing something like that because it doesn't make sense, and that's pretty much where I'm at, then I would suggest don't do it. Ask those questions, think critically, use your own head. I mean, we're all given a brain. I think we just have to use it sometimes, and maybe not believe, but at least question what we are actually being told. So that's my ask. That's the point of this video. So I hope you found that useful. So if you did like that video, please do give me a thumbs up. It does help the YouTube algorithms. If you are not yet a subscriber but want to see similar content going forward, then by all means do hit the subscribe button. And if you want to leave me any feedback, questions or comments, please do so in the comment section, along with any suggestions you'd like me to cover in future videos. So until next time, stay safe and healthy, and thank you very much for watching.